Well, we're going to speak now to the chief economist at the OECD, Pier Carlo Padoan, and he joins me now from Paris. Thank you very much for joining us. You've painted a pretty bleak picture there. What are the main reasons why that growth in the G7, excluding Japan, is going to remain so low?
Well, there are factors that produced more damage than was expected. One of them being the aftershock in Japan, which has disrupted trade through global value chains. Another factor has been a higher negative impact from high commodity prices on purchasing power, and also maybe an over-acceleration of fiscal consolidation in some countries that have put a dent on growth higher again than anticipated. But above all, what we see as the main factor of the slowdown is the dramatic drop in confidence, both in households and in business across the OECD area, which itself reflects, in our view, the perception that policymakers were not up to the challenge, both in keeping their medium-term promises and possibly dealing with short-term weakening of the economy.
Now, another negative that came out today is the labour market. After initially looking like it was coming back, it's actually stalling again. How important is that?
That is very important in itself, and also in the fact that it is a factor that is behind the fall in confidence of households, which do not see improvements in their job perspectives, especially in the United States. And of course, unemployment there has been for a long time very high and risks becoming structural.
So, what are you looking for in President Obama's speech today?
We are looking forward to very targeted but also important in quantitative terms measures to boost the job market, both in terms of support of tax slashes but also indirectly through possibly infrastructure investment projects.
And what are you looking for central banks to do, both with interest rates and possible intervention elsewhere?
Well, this is conditional upon the going forward growth perspectives. If those figures turn out to be more negative than the ones we see now, then it would be appropriate for central banks to use all their policy space, both in terms of interest rate space and in unconventional policy space, to avoid that short-term weakness derails long-term consolidation and structural programs.
Moving on to fiscal policy, the austerity measures that are in place, in your view, they should remain there, is that correct?
Fiscal consolidation, credible fiscal consolidation is essential in all OECD areas, which are facing, all OECD countries are facing huge consolidation efforts in the medium term, and this has to continue. This will boost confidence, as we know, but in the short term, the weakness of demand may have to be countered, possibly through monetary instruments rather than fiscal. We do not see much fiscal space around, and specifically not in all countries.
And I wanted to ask you about banks. You think that acceleration, that capitalization should be accelerated, but doesn't that come with an inherent risk?
Well, we all knew for a long time that banks need to be recapitalized in the United States and in Europe, perhaps even more so. This needs to go forward. Of course, the fact that growth is slowing down implies that this also will have a slowdown in recapitalization, but the direction should be clear. And the framework, for instance, put in place under Basel III should be implemented. It already takes a long time to implement that. We should not further delay that.
And very quickly, emerging markets, inflation there is improving.
Emerging markets are growing, although a little bit less, and inflation may be peaking, which is good news because that would allow monetary tightening, which is ongoing there, to be less so, and therefore sustain growth in those areas, which is good for the whole world.
Mr. Padoan, thank you very much indeed.